how proactive tax planning creates predictable cash flow. What if your cash flow stopped feeling unpredictable? Not just a month to month, but quarter to quarter, decision to decision. For most agencies, cash flow isn't unstable because revenue is inconsistent. It's unstable because taxes are reactive. Why does cash flow feel uncertain? Here's what I see with agencies all the time. Revenue looks solid, clients are paying, the agency's busy, but underneath that, there's tension. Estimated payments feel like guesses. Big tax bills show up without warning. Owner's pay changes based on anxiety instead of strategy. So decisions get delayed, hiring feels risky, and cash flow feels unpredictable, even when the agency is healthy. What's the real problem? The issue usually isn't spending, and it's rarely revenue. It's the lack of proactive tax planning. When taxes are handled reactively once a year, they interrupt cash flow instead of supporting it, and that uncertainty compounds. How does proactive planning change estimated payments? Let's start with estimated payments. Many agencies treat them like a fixed target, a fixed number every quarter with no relation to current year income, and no clear explanation why. With proactive planning, estimated payments are based on intent, not surprises. We're forecasting ahead, we're adjusting quarterly based on profit, so payments become predictable, planned, and absorbed into cash flow naturally. No more guessing, no more scrambling. Next is timing. When income, expenses, and tax strategy are aligned, you control when money moves. That means knowing when to accelerate or defer income, planning expenses strategically instead of reactively, avoiding cash crunches caused by poor tax timing, because timing is leverage, and proactive planning gives you that leverage. How does planning create stable owner pay? Owner's pay and distributions is where unpredictability really shows up. Without planning, it's emotional. Can I take more money this month? Should I just hold back just in case? With proactive tax planning, owner's pay becomes intentional. You know what's safe to take, what needs to stay in a business, and how taxes factor into both. That clarity turns owner's pay and distributions from a question into a system. Predictable cash flow equals confident decisions. This is the real outcome. Predictable cash flow isn't about playing it safe. It's about making confident decisions. Hiring without hesitation, investing without anxiety, paying yourself without second guessing. That's what proactive tax planning creates. Not lower taxes alone, but control. Predictability is power. And when agencies plan ahead, instead of reacting, cash flow stops feeling uncertain and starts working for them.